Hello everyone, welcome to my classroom. I'm Neetu Ann Thomas, working as an assistant professor in the Department of Civil Engineering, SNIT Adur. I've been teaching you Principles of Management, which is being taught for the 6th semester K2 BTech students.
So in a previous class, we've learned about the requirements for effective control. Hope you're clear with the idea. And this class, we're learning about control techniques. Since there is no universally accepted control system available for organizations, it becomes essential for each organization to develop a control system that suits the situation and requirements of the organization. Moreover, management needs to establish control at different levels and functional areas. So the important control techniques used in by the managers are described now. First one, budgets. So budgeting is, as we all know, is a formulation of plans for a given period in numerical terms, right? Budgets are formulated before the commencement of the work activities. They become the standards to the managers for measuring, monitoring, and controlling the work activities. It can also become the basis for coordinating the different activities of an organization. Right, so there are capital expenditure budget and sales budget. Budget is nothing but it is a measurement or something which we formulate well in advance of the commencement of the activities. So there is capital exchange budget or financial budget and sales budget. So financial budgets specify the amount of money to be spent on items that have long-term use, such as lands, buildings, etc. Okay, long financial budgets are for long-term use. Sales budgets shows the expected number of sales units and the expected price per unit, right? So budgets are formulated um, before the commencement of work activities, right? So it has been divided into many. Uh, Budget feedback can serve as input for improving both the planning and controlling process. So it is used to fix targets in monetary terms and control the deviations if any. So budgets are being divided into on the basis of time, flexibility, function, and receipts and expenditure, right? So these, on the basis of these, it's being divided, and this base is also divided into again long-term budgets and short-term budgets. Long-term and short-term. Flexibility, it's again been divided into fixed budgets and flexible budgets. Functions is again divided into sales and production. Recipients and expenditures divided into capital and revenue. Right. So these are the types of budgets, or on what basis budget is being classified into, and the different sub divisions also. So that's all about budgets. It's the first controlling technique, right? Budgets is nothing but it specifies the amount of money that is being expected before the commencement of a work activity. Long-term budgets. So long-term budgets are extended from 3 to 10 years. They are prepared mostly in terms of physical quantities rather than in rupees. Right? Those are long-term budgets. For example, land or a building, as we've discussed earlier in case of financial budget. Now, short-term budgets are those which are prepared for a period of 1 or 2 years. These budgets are prepared in monetary units, that is, in terms of money, and are more precise than long-term budgets. Right, hope it is clear, long-term and short-term budgets. When you go for flexibility, it's fixed budgets and flexible budgets. Fixed budgets are those which are prepared for a fixed or a standard period of time. They do not change with the change in the volume of activity. While flexible budgets are those which are developed with the objective of changing the budget figures. As the situation changes, we have to change the budget also. So such budgets are called as flexible budgets. On the basis of function, it is divided into sales and production. So sales budgets are nothing but it is used to determine the quantity of anticipated sales and expected sales price per unit. But production budget is the budget to indicate the production for the specified period, and it is expressed in units of outputs produced. So how many outputs are produced, on the basis of that we'll justify or calculate the production budget. And receipts and expenditure, on the basis of that it is divided into capital and revenue. So capital budgets are those which take into account the estimated capital receipts and expenditure of the business for a specified period, while revenue budgets are those that cover all the revenue, receipts and expenses of a particular financial year. Right, capital budget is something which estimates capital receipts, and revenue budgets are those which covers all the revenue receipts. So this is all about budgets. The second control technique that I'm going to explain is financial statements. Right. So what are financial statements? Budgets are the most common means of financial control, but there are other useful tools also, like financial statements. Financial statements are prepared at the end of every financial year to assess the various financial activities. So the two most commonly used financial statements are balance sheet and income statement. So financial statements are prepared at the end of the year or a financial year to assess the various financial activities. Now it's divided into, or the main financial statements are balance sheets and income statement. Income statement or profit and loss account. Right, profit and loss account is a statement prepared at the end of every academic year to ascertain the revenue profit earned from the business during that accounting year. And balance sheet is a statement of assets and liabilities that helps us to ascertain the financial position of a particular data. It is a historical report showing the cumulative effect of past transactions. That is balance sheet. Balance sheet is a sheet which helps us to know what happened in this particular date. So it reports every statement that happened in the past, while income sheet or profit or loss statement is prepared at the end of a accounting year to find out the revenue profit earned, whether it is a profit or a loss that happened during the accounting year. On that accounting year, what is the state of the company? If it is a profit or the profit statement, or the loss, it is a loss statement, right? So that is financial statements. Usually, financial statements are prepared at the end of the year, end of the financial year, and these are the two common financial statements.
So a Gantt chart was developed during World War One, and it is a bar showing the relationship of activities on a time scale. As you can see the figure, the x-axis is denoting the unit of time and the y-axis is denoting the activities. So it has an idea of tracking the progress of activities. So the job of activities are shown in the form of bars. You can see bars in the chart, and these bars represent the activities done. So the length of the bar shows the time and the job or the activity takes for the completion. So how much time is required for the completion of the work is what the bar shows. So in the bar charts, you can see activities A and B is at the same time, right? Starting at the same time and proceed concurrently or are parallel in nature. But the time intervals are different, right? So B is the time of completion is 20, while in case of A, the time of completion is 25. So it is 5 days after. So that is what the bar chart means. Similarly, you can see activity C begins 5 days after the start of activity A and B. And activity D starts after the completion of the activity B. So likewise, activity E starts 5 days after the start of activity C. Right. So that is what it is being denoted by the bar charts. So it shows, the Gantt chart shows the time relationship between the events of a production program, and it is easy to understand and produce a usual visual summary. We will know more if we are seeing it visually. All right, with we really know the clarifications or the effectiveness of the activities that is being carried out in the company in a required time. So that is another way of controlling technique we use in any firm.
So hope you're clear with the control techniques, budgets, financial statement, and Gantt chart. That's all for the day. Thank you.